right, friends, welcome to episode number 464 of the Follow the Money podcast, where we dive deep into the world of investing, trading, and personal finance. I'm your host, Jerry Robinson, and today we have an exciting episode lined up for you. We're going to be talking about Apple's latest leap into artificial intelligence. We're also going to talk about the much anticipated May Consumer Price Index update. We're going to talk about the latest in inflation. Also, the Federal Reserve is currently meeting as I record this on Wednesday morning, the 12th of June, and the Fed will be announcing its latest policy decision this afternoon. And so I'll provide some of my thoughts on that as well. So we got a whole lot to cover, so stay tuned for some insightful analysis and actionable information. Well, we're just halfway through the week. As I mentioned to you, I'm recording this on Wednesday morning, the 12th of June, and it has already been a very packed week. We began the week with the NVIDIA 10-for-1 stock split. NVIDIA is a company that we own here. I personally own it in my long-term investment portfolio, and so we were very happy to see that the company continues to fire on all cylinders and announced that 10-for-1 stock split back in May, and then we saw, of course, that split take place earlier this week. As I mentioned, also, we're going to be talking in segment 2 about the latest inflation report we got for May CPI, and then we're also going to comment a little bit on what's we expect from the Federal Reserve. They're going to be announcing their latest policy decision a little later today. But in this first segment, we're going to focus upon Apple's new AI strategy. And of course, the big news this week from Apple at its Worldwide Developers Conference, something that many people look forward to for software updates from Apple, which, by the way, this morning, due to the price action in Apple, due to the AI announcement that they made at the WWDC, they surged to the number one spot in terms of market cap. So they are now the largest publicly traded company once again, outpacing Microsoft and NVIDIA after falling behind a little bit over the last couple of months due to NVIDIA's surge and Microsoft also doing very well this year. But Apple moved back to the top of the heap in terms of market cap due to largely this announcement, I believe, about its AI strategy. So let's begin talking about Apple's groundbreaking AI strategy known as Apple Intelligence. So if you've been following the tech world, you know that Apple has finally publicly jumped aboard the AI bandwagon, and they're not holding back. We look at the WWDC presentation on various software updates, and Apple Intelligence is what Apple is calling its AI strategy. Very interesting, considering that those initials AI, Apple Intelligence, kind of dominate the topic here as far as AI. So they're basically going for that. And interestingly enough, it was a few years ago that Alibaba had talked about Alibaba Intelligence, something very similar. So it looks like Apple has dominated that name and maybe secured AI as its initials, which is fairly interesting. But anyway, what we saw from the WWDC was that Apple is initiating a system-wide update integrating AI tools across iOS 18, also across iPad OS 18, and then also in the new Mac OS Sequoia. So this isn't some sort of minor upgrade here. This is a significant shift in how we are going to be using Apple devices. So the major highlight that was mentioned in the developers conference was a new and improved Siri, which can now handle text interactions more smoothly and I would say in a smarter way. And it also integrates with OpenAI's ChatGPT for those more complex tasks. And so you'll be able now, with this newest upgrade, to ask Siri to sort through your emails or to find specific photos. So it's a pretty big game changer here. Apple has also really struggled to emphasize, I think, privacy with on-device processing for most of the tasks and even some of the more intensive AI tasks. And when they get really intense, they're going to be using something known as private cloud compute, which again, they claim is ensuring that your data is going to remain secure. So we'll be, looking for that. I think that's going to be a point of contention. We've already seen a point of contention with some warning that, the privacy of consumer data may be compromised here. Apple is pushing back against that. It's obviously something that's a very hot button issue. But other AI features include enhanced writing tools, voice transcription capabilities, image generation, smarter notifications. All of these advancements are likely to significantly bolster Apple's position in the market. As I've mentioned, they've already surged to the number one spot in terms of market cap. And it's going to make Apple publicly known now as a key player in AI alongside companies like Microsoft and Google. Some calling it the biggest move they've seen from Apple since the 2007 moment when they unveiled the iPhone. Well, time will tell. When we think about the iPhone, we realize that iPhone was really a major innovation in terms of phones where you could actually touch the screen. Well, this was novel. This was fairly new. It was obviously an innovative technology, and it really revolutionized the way that other companies began to create and innovate. So today, we're not dealing with some sort of new touch phone that Apple is releasing. Instead, now we are dealing with artificial intelligence that's improving the phone, improving the experience for the user. And Apple has done a very good job, in my opinion, of staying ahead of the curve and being that key innovator when it comes to hardware and even software. So, I am a long-term investor in Apple. I don't think that's any secret. I've talked about that before on this podcast. And I am impressed with what I've seen from the latest WWDC. I had some expectations that I think were, quite frankly, very much met from what I heard. And so I'm overall bullish, long and strong on this particular company for the long term in my long-term portfolio. And over the last few years, even over the last couple of years, we've seen that Microsoft and Google were rapidly incorporating generative AI across their products. They created a lot of buzz and set a lot of high expectations. Microsoft had integrated OpenAI's ChatGPT into its suite of products. Google has been pushing forward with its own AI initiatives like Gemini. And meanwhile, Apple appeared to be trailing behind, focusing more on privacy and incremental updates rather than a bold move in the direction of artificial intelligence. And many were wondering, what's Apple going to do? Well, now with the introduction of Apple Intelligence, Apple is making a strong statement, in my opinion, here. The integration of AI tools throughout iOS 18 and through the iPad iOS 18, and then, of course, the new Mac OS Sequoia, looks like more than just a catch-up move. It looks like a strategic shift aimed at embedding AI deeply into the user experience. Now, the thought of your phone being able to be more, like to serve as an assistant to you is actually what Apple is going for here. The phone is going to play even a more integral role in your life. And for many people, that's just, it's difficult because the phone is like an attachment to the body anymore, the smartphone. But they continue to get smarter and smarter, especially with these latest updates we're seeing here. Now, you will have to have one of the newest generation phones, the Apple iPhone 15 Pro or Pro Max, in order to be able to access these new updates to iOS 18. And that builds the case for an upgrade cycle here. So that means that many consumers who are going to want access to these more private, useful, and smarter devices and software are going to need to upgrade their phone. That's one of the problems that Apple has had, along with other companies as well. Tesla's similar to this, is that they make really good products. And so if you buy an Apple, say an Apple 12 or an Apple 13 or, iPhone, like an iPhone 13 or whatever, well, you look at it, you say, well, this is a great product and it lasts for years and years. Oftentimes they last for a very long time. Well, that can actually serve to hurt, the company like Apple or even Tesla, who, builds great cars. And oftentimes people will just sit on those and not upgrade them. Well, that's why this particular update from Apple is so compelling, I think, for investors, is because they're not spreading this, AI access through all of their devices. It's only to the newest generation, the newest iteration. And so that, of course, is going to build the case for more people to upgrade their phones. And when you think about, Apple, they have, nearly 2 billion devices. I think actually more than 2 billion devices install base. So you literally just cannot overemphasize how huge the Apple ecosystem is. And as they roll these tools out, I think users are going to be very impressed. Now, again, the thing that I had hinted at earlier was the fact that there's concern about data privacy, right? And Apple has had a long-standing commitment to user privacy, more so than many other companies. And you can also see this in the way that Apple is rarely hacked compared to other types of devices out there. Your Apple products tend to be more insulated from hacks. Not always. I mean, things can happen. But relatively speaking, Apple is less prone to being hacked. They just have emphasized privacy and protection of consumer data much more than others in the field of tech. And so you do look at this and you do wonder what kind of privacy measures are being taken. Well, Apple seemed to stress that a lot at the WWDC. The jury's still out on how all that's going to work out. There's also some other things to consider in terms of how successful Apple can be in this move into AI. Apple has a history of promising groundbreaking features that sometimes fall short of expectations. I'm thinking initially of Siri, which quite frankly has just not been as exciting or as powerful, perhaps, as it was initially billed. And so I would suggest that investors should watch closely how these AI tools perform in the real world and whether they really truly enhance the user experience. But I'm gathering from my early investigations here that they are going to. Even my own experience with ChatGPT, which is going to be integrated into the iOS 18, is just simply phenomenal. And of course, it's just going to get better and better, right? So we can't really judge it based upon how it is right now in 2024, because the upcoming iterations of ChatGPT and of future versions of operating software, operating systems by Apple are going to improve. But in the coming months, here's, as we conclude this segment, I just want to say in the coming months, here's what I'm keeping an eye on. Number one, user adoption, right? So how quickly and effectively are users actually adopting these new AI features? That's going to be crucial, right? So we're going to be watching for that, looking for customer feedback, looking for user satisfaction. We're going to be watching to see how all that comes out. Secondly, the big elephant in the room is that privacy, right? So when you're interacting with your iPhone and you're using ChatGPT to help enable you or assist you, well, Apple's handling of that AI-related data is going to be under scrutiny, and any misstep that Apple makes here could impact user trust and adoption rates. So we're going to be watching for that privacy. That's going to be a big deal, I think, especially initially until people warm up to the idea. This is new. Also, we want to see how the market responds. We want to see how the market is going to react to these innovations, particularly in comparison to Microsoft and Google, because they have their own offerings and they're going to be coming out with their own devices and whatnot to challenge Apple's supremacy here and try to seek to erode Apple's competitive position. And then also we want to look at the financial, basically the bottom line. We're going to be looking for signs of increased revenue from the new AI-driven services for Apple. And according to what I've seen, there's going to be the huge likelihood here of new revenue streams in the form of service offerings and subscriptions. And the App Store is obviously going to be expanding with all of these new offerings. But in summation, I'm leaning towards the fact that this is much more like an iPhone moment for Apple than it is a dud. I think this is going to truly revolutionize our understanding of what a smartphone is. And I think 1 to 2 years down the road, many people will become used to this. This will become the new normal, and it will require simply another innovation to really kind of erode this. So as I look forward, I think investors should be staying tuned in and be prepared for, I think, an exciting evolution in Apple's AI journey. As I mentioned, I own Apple for the long term. For a long time, it was my number one holding. NVIDIA overtook Apple as my largest holding back in 2023 as it began to emerge from a very oversold position, in the markets as it rebounded in 2023. So NVIDIA and Apple, my two largest holdings, and I'm very glad to see what Apple is doing. I like the innovation. I think there's a lot of potential here. If you missed all of the updates from Apple, we'll provide a link in today's show notes where you can watch the full, it was nearly 2-hour presentation, kind of a fast-paced presentation where they're laying out all the new software updates at the WWDC. We'll provide a link to that in today's show notes. All right, well, stick around. And on the other side of this break, we're going to come back with some economic commentary. I'm going to dissect the latest May CPI report. We just got inflation numbers for the month of May, better than expected. And we're also going to talk about what to expect from today's FOMC meeting and announcement when they release their summary of economic projections and their dot plot. We'll talk about all that on the other side of this break. Hold tight.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to one of the longest running personal finance podcasts on the web. FollowTheMoney.com is our website. You can find us there. All of our podcast archives, many videos, educational resources waiting for you there. Plus, we have a membership area for those who are premium members where we provide an immense amount of information, including daily email alerts, daily trading ideas, weekly coaching calls, on and on and on. Anyway, let's pivot now to the economic front here in segment 2. Wednesday, as I record this Wednesday morning, this is a big day for the macroeconomic and monetary policy fronts, where we have the Federal Reserve announcing its latest policy change, which we don't expect any change this afternoon. But this morning, we did get the CPI report for the month of May. Now, CPI, that's the Consumer Price Index. That's a fairly decent gauge for inflation. It's not really the preferred inflation gauge that the Federal Reserve uses, which is the PCE index. But nonetheless, the CPI, the headline number, is always important for the markets. And the May CPI report showed more signs that inflationary pressures are cooling, and that is boosting chances of a Fed rate cut later this year. We'll talk about the Fed and its possibility of cutting rates later this year in just a few minutes. But let's begin with this breakdown of the latest Consumer Price Index, the CPI report for the month of May, showing that consumer prices rose 3.3% year over year last month. That was below expectations of 3.4%. And while that may seem meaningless, those two numbers, they sound, well, it's so similar. Well, even just a small fraction of a difference can make a world of difference in terms of the total amount when you're dealing with an economy the size of the United States. Now, month over month, the rate of U.S. inflation was unchanged, which basically it was just a 0%. And it was that's below the 0.3% rise that we saw in the month of April. And it's certainly below the consensus estimates of 0.1% for the month of May. So it came in better than expected. We would say that this report is cooler than expected. Economists had been expecting a good report, but not this good. So this is better than analysts had expected. When you turn to the core CPI is where you exclude food and energy costs. And when you look at that growth, it slowed to about 0.2% for the month of May. That's the best reading we've seen since July of 2023. And the core CPI grew at a 3.4% year over year rate. That's the smallest year over year rise we've seen since early 2021. Now, when we dig deeper into the report, we find that one of the major drivers of the lower costs last month was falling energy prices. Gas prices, for example, spent the majority of the month of May just falling. So energy costs fell 2% in the month of May. Food costs rose just a fraction of a percent, just 0.1% in the month of May. Shelter costs continued to be stubbornly elevated. They rose 0.4% on the month. And then we saw things like new vehicle prices. Those have been falling. They fell another 0.5% in the month of May. We also like to track medical care services because those can also be pretty stubborn. Those rose about 0.3% on the month. They're up about 3.1% year over year. So overall, the report came in much better than expected. And that's good news as it comes in just before the Federal Reserve announces their latest policy decision. Now, we don't expect the Fed to cut rates based upon this information. Far from it. In fact, we expect no rate action at all at this month's meeting, which is, again, being held yesterday and today, and the announcement will be coming out later today, so be on the lookout for that. But following this report this morning on Wednesday, we saw stocks rose sharply, bond yields tumbled, and that just basically indicates that investors are feeling a bit more relaxed about the inflation outlook. It appears the markets, are starting to believe that the Fed's efforts to control inflation, quite frankly, the inflation they helped stoke, could be paying off without derailing economic growth. That's been a big concern, this balancing act that the Fed has had to deal with, is trying to land the plane without, wrecking the economy. When you're trying to slow down the rate of inflation, well, you have to raise interest rates. And when you raise interest rates like the Fed has, well, then you risk, borrowers becoming over leveraged. You run the risk of slowing consumption down to a crawl. You run the risk of harming the labor market, and those things really haven't been seen the way that some had perhaps forecasted. So as we look out, we see the labor market still remains fairly resilient. We got that jobs print last week that was a blowout number, 272,000 or so new jobs in the month of May versus less than 200,000 was what the consensus estimates were. And that's just, that complicates the picture for the Fed, quite frankly, where good news becomes sort of bad news for the Fed. But at the same time, the Fed is going to hold steady here with its interest rate level somewhere between the 5.25 and 5.5% range on the Fed funds rate. And right now, there's no expectation of a rate hike or a rate cut at this meeting, nor is there an expectation of a rate cut in the month of July. However, when we get out to the next meeting, so between now and September, there are 3 meetings for the Fed. There's one on June 11th and 12th, one on July 30th and 31st, and then finally the one on September 17th and 18th. Now, it's at that September meeting that the expectations of a rate cut have elevated now to well over 70%. So the expectation now of a rate cut in the month of September growing. That could be a 25 basis point rate cut. It could be a 50 basis point rate cut. I would probably, at this point, I would assume it would probably be closer to the 25 basis point cut, but you never know. They might begin a little bigger when they begin to cut rates. And then if you look out in the futures market, you'll see that September is then followed by another rate cut in the month of December. At least that's based upon expectations from the futures market. So when the Fed comes out today and it releases its policy decision, which we expect to be no change at all, we also expect them to tell us that they're taking a wait and see approach. They're evaluating economic data, not trying to make too much of one data point before they make any moves. Now, tomorrow I will put out an email report to all of our members about what the Fed has to say, and we'll provide our commentary on what we expect. And then we'll also, this morning, for example, we did a big write-up on the CPI. That's going to go out to our members tonight. They'll have access to that. And if you're not a member here at Follow the Money, I just got to say, you're really missing out on some great ideas. We told our members about many different stocks and cryptocurrencies well before they rose, and we have more. In fact, I just put out a couple of new buy alerts, both stocks and cryptos. And if you're not currently a member, you're just missing out on those ideas. Plus, we also put out a daily swing trading idea for those of you who like to swing trade. I provide a hand-picked idea every day. We also put out every day. Our system detects new swing trading alerts, new position trading alerts, even new long-term investing alerts. All of these are available when you log in as a member here, as a premium member at followthemoney.com. We also have hundreds and hundreds of hours, if not thousands of hours by now. Yeah, in fact, we definitely have thousands of hours of video education on the topic of stocks and income creation and real estate and cryptocurrencies and so many other topics, trading and options. I mean, so many different topics. That's really what we need, friends. We need education, financial education. Financial illiteracy is a pretty big problem here in the United States, as it is in much of the world. And one of the ways that you can get ahead financially is just education, committing to educating yourself. And so if that's something you're into, if you're into financial education, or if you have someone in your family, maybe a daughter or a son or a grandson or a granddaughter who you'd like to empower with financial education to help them become more savvy in their investments and learning how to increase their income, consider followthemoney.com. Gift them a subscription right here where they can continue to get excellent information so that they can grow their wealth over time. All right, friends. Well, that pretty much wraps up our segment here on the Fed and also on the latest CPI report. Don't forget the Fed will be out later today with its dot plot, its summary of economic projections. It'll also, we don't expect any kind of rate action, but there's going to be some interesting details in their summary of economic projections, which could be market moving, not just today, but also well into tomorrow. So we'll be keeping an eye on that. And our premium members be looking for our nightly emails to provide you updates on the things that are happening and why they matter to you. All right, friends. Well, that brings us to the end of today's episode. It's been so great to have you here today. And as we wrap up, let's summarize today's discussion. We began in segment 1 by talking about Apple and Apple Intelligence in particular, how Apple is making bold moves in AI with its new strategy that was unveiled at the WWDC. We also talked about the latest inflation report for the month of May, the CPI update, and we discussed what we expect from the FOMC meeting, which is going to conclude later today along with its update. So these are the key events to watch this week. They certainly will have significant implications for investors. Now, in closing, I like to leave you with a final word, and this time it's an inspirational quote from, fittingly, Apple's co-founder, Steve Jobs, when he said, "Innovation distinguishes between a leader and a follower." As we've seen today, Apple's commitment to innovation continues to push boundaries and set new standards. That's why I maintain a long position in the company, and I have a long-term time horizon on that long-term investment holding. That's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and thank you for joining us on today's episode. Don't forget to subscribe to our podcast and leave a review if you enjoyed today's episode. Until next time, my friends, God bless.
Information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any